Recyclico, making lithium-ion last forever. Recyclico's patented recycling process achieves up to 100% recovery of battery metals from lithium-ion batteries for electric vehicles, including cobalt, lithium, nickel, manganese, and aluminum. Recyclico Battery Materials Incorporated trades on the TSX Venture AMY, on the OTCQB AMYZF, and Frankfurt ID4. For more information, visit recyclico.com or phone us at 778-574-4444. Recyclico, making lithium-ion last forever.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Robert Campbell, publisher of the realestatetiming.com newsletter. He's speaking to us from San Diego. Welcome back to the show, Bob.
Thank you, Jim.
Bob, will inventories of real estate increase after Labor Day?
Yes. For those that follow me, I called the top of using the indicators that I follow, and I'm like 90% data-driven and historical pattern-driven. I called the top of the market back in mid-2022. Since then, the prices came down quite a bit, maybe, 5%, 6% nationally. In California, you could double those numbers. And then all of a sudden they took an upturn. Starting in January 1st of 2023, and they retraced, nationally, they retraced practically all of that downturn. California, they retraced about half of it, and I said that was a bull trap. It's going to scare people. It's going to fool people into buying, and I think we've reached the turning point now where the resumption of the downtrend is going to continue.
Now, when you say a bull trap, what is that exactly?
That means this, is that when prices are going down, you're in a bear market. All of a sudden you have a counter trend rally. We're in a bear market that, some people think, things are too cheap, and they start going up for a short while. In this case, 3 or 4 months. And that what people sense is that, oh my God, real estate's starting to go back up. And so they jump on board the bullish train, and it's a trap. It's the fear of missing out, FOMO, fear of missing out, that takes a lot of new buyers into the market and goes, real estate's not going down, it's going back up. And so they jump on board, and then they're trapped. They're trapped because they bought at a high price, and when the downtrend resumes, all of them are going to be in trouble.
Is inventory going up because mortgage foreclosures are starting to happen again? There was a moratorium on them during the pandemic, but now banks can take your house again.
Yes, they can. In fact, that's something that's one of my 5 key indicators, 2 of them of which are mortgage defaults and foreclosure sales. And during the 2 years of the moratorium, that was all put on hold, where you didn't, even if you didn't make any payments on your house, you couldn't foreclose on it. So there was a 2-year period where all the data I was getting was all compromised because of the moratorium. Now that data is starting to bleed off. The bad data is being replaced with good data, market-driven data, and what we're seeing is that slowly but steadily, notice the defaults are starting to increase, as are foreclosure sales. So that trend has turned.
Does that mean you should hold off a bit, wait till there's more if you're looking for a bargain, or will there just naturally? And
then I'm not talking about 6 to 12 months, guys. I'm talking about years. Here in the United States and in California, the real estate cycles, typically there's 6 months, 6 years up, 6 years down, 6 years up, 6 years down, those cycles. And in 2022, that top came after an 8-year up, and now we're heading into the 6+ years down, and so it's going to be quite a while. I anticipate that the bottom of the U.S. housing market, the cycle lows will occur somewhere around 2028. So we're talking 5 years from now.
Well, like I like to say that the changes in cryptocurrency happen at the speed of a bullet. Changes in real estate come at the speed of a charging glacier.
Yep, just about. Or a lot of people like to use the analogy that all of a sudden it's like trying to turn a aircraft carrier around. You know how long that takes, right?
But once it starts, it's very hard to stop.
Absolutely. And that's a good, excellent point, too. Whatever direction it's going, it's hard to slow that thing down, because what drives prices higher is greed, and what drives prices lower is fear. And based on those two emotions of human nature is what drives all price movement. But real estate's a lot slower than the stock market, and that's why I'm much more confident about making money in real estate than I am in stocks. So you do what you know best. Plus, the stock market is much more rigged than the real estate market, so I like to stay away from rigged markets.
If things are going to fall for 6 years, good idea. If you're planning to sell now, because you're not going to get more money 6 months or a year from now.
Absolutely. In fact, I'm writing my September 2023 timing letter right now, and I'm looking at the cycles. And right now, housing affordability, people don't pay as much attention to affordability as they should, because if you look at a long-term chart, let's say a chart that goes back 50, 60 years, when unaffordability gets to reach certain levels where only, like, let's say 15% of all households can afford the average price, the average price U.S. home, that's the danger zone, guys. That means that the trend is about to reverse, and for good reason. People can't buy what they can't afford, and so buying stops, and the buyers are what control the market, not the sellers. Buying stops. Now, if a seller, all of a sudden now there's less buyers because the buyers are just, refusing to participate. Now, if you want to sell your home with less buyers, you only have one choice. You have to drop your price. So now the cycle has turned. It's gone from going up to going down. And cycles, of course, feed on themselves, both to the upside and downside, because of human nature. And that's just the way the world works. It's amazing that, I always thought I was real smart when I was 35 years old. Now I'm over double that age, and I realize how little I knew when I was 35.
Well, yeah, that's the curse of old age. You wish you knew what you know now back when you were 21. Imagine what you could have done.
And that's exactly right. But you know what, Jim? There's no way that you're going to get around learning by trial and error. That's how we all learn. And you know what? That no 35-year-old guy in the world, I don't care how smart he is going to be as wise as I am when it comes to real estate cycles and price movement, because I've lived through it. I've seen the good and I've seen the bad, and until you've experienced both, you never really know.
Yeah, when people say interest rates, do you think they're as high as they're going to go, or could this be like 1981 when I bought a 21% Canadian government savings bond?
With respect, you hear people talking about mortgage rates, interest rates all the time, and they go, oh yeah, interest rates are approaching, 7.5%, 30-year mortgage rates in the United States, 7.5% right now. They go, stop crying. I remember when I bought back in 1980, 1981, I paid 15, 16, 17, or whatever the story is, so these interest rates still aren't bad. That is totally useless information, because the whole dynamics of everything have changed since then. Back in 1981, the average price home, let's say, for example, in the United States, was probably less than $100,000. Today it's $380,000. Let's say 4 times greater. 4 times greater. The populations change. So many things have changed, so that you can't compare, affordability conditions back in the 1980s with what they are today, because everything has changed. The only reason you should look to the past is look see the cycles and how they've evolved. Wow, look what housing prices, in 1975, look when U.S. housing prices peaked. What were the market conditions that time? Was affordability high or was it low? Affordability was low. Were house sales high or were they low? They were high, but turning down. How about building permits? They were high, but turning down. What about foreclosures? They were very low, but turning up. And that's where you look at it, and the way you learn, the scientific way of learning is through observation. You have to look with your own eyes, identify what the market conditions were, and how those market conditions led to change. That there defines science. Anybody that what you think without observation is nothing but theory. Nothing but theory. And that's one of my key rules for investing. Trust what you see, not what you think.
Are we going to see developments abandoned by the contractor because right now they're going to have to pay high interest to get it and they're never going to get the return on it that they expected?
Absolutely, based on past cycles, and that's what gives me such an advantage over most people that don't have my background. That my dad was a builder developer for 55 years. I grew up on a building site. That here in San Diego, which is one of the finest places in the world to live, primarily based on weather. Weather's a big deal. Back in the days, I've seen high-rise. All of a sudden, they were starting to build high-rise apartments downtown San Diego. They dig the hole in the ground, and all of a sudden bad times hit. 2 years later, guess what that hole looked like? The same as it did 2 years prior. They just abandoned it. That happens, guys. And people don't believe that stuff can happen. But once you've lived through it, yes, that can happen. And all of a sudden, now with respect to like commercial real estate, most commercial real estate is financed with 5-year loans. There's no 30-year loans on a shopping center. You get a 5-year loan. Okay, 5 years ago, how much did that loan cost you? Oh, I don't know. That 5-year loan cost you, I don't know, let's say 3 or 4%. Okay, fast forward to today with today's rising interest rate. What's that loan what are you going to refinance that loan at? At least double that. Does that change the economics of your project? Yeah, dramatically. So now your next decision is, will I stay or will I walk away? And in fact, in some areas, let's talk about the worst first, like San Francisco, a 1,500 unit hotel was just abandoned by the owner. 2 different buildings, 115 units total. They just walked away from it because all of a sudden the loan became due. I mean, the economy up there is in bad shape. And they said, we can't do this anymore. At 350 California Street, which is a major commercial street for San Francisco. I think it was a 38-story office building, sold for, $380 million back in 2019. It just changed hands about 6 months ago for $62 million. $62 million. I mean, what did it lose? 70, 80% of its value? So that can happen, guys. I mean, that's why you always have to be on your toes as far as what the risk is in whatever you're doing. You have to manage downside risk. If you just go through the world thinking everything's going to be good like it's been the last 5 years, eventually you're going to get nailed and you're going to go broke.
We'll have more with Robert Campbell right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Robert Campbell. Robert, the second largest real estate company in China, Evergrande, has declared bankruptcy protection. Their biggest company, Country Garden, also in difficulty. Will that real estate crisis spill over to North America?
Well, I don't know about spilling over, but it's already happening in North America, at least here in the United States. When you look at different asset classes, like that true valuations, if you wanted to sell your office building today, in a major city, you would have to discount the price 40 to 50% of what you could have sold it for 3 or 4 years ago. Now, if enough of those things start going broke, and enough companies that own those things start going broke, like hedge funds and things like that, will the government step in and bail them out because they're too big to fail? That wouldn't surprise me at all. Wouldn't surprise me one bit. So, I mean, could that happen? Yeah. In fact, I'd probably, if I had to bet, I'd say, yeah, chances are better than 50-50 that it will happen. But if you, the little guy, if that happens to you, if you have a 30-unit apartment house someplace that you bought 10 years ago, and it went from, $500,000 up to $1 million, and now it's on its way back to $500,000 because of market conditions, interest rates, and a variety of other market forces, and it goes back to 500, and your mortgage is still, $600,000, and you're $100,000 underwater, and you can't afford to make the payments anymore because of the cash flow. Are you going to be bailed out? Of course not. So you're just going to eat it.
Now, we've actually seen that happen where office towers have been, the owners have just walked away. What happens to those abandoned buildings?
Well, they have a new owner.
Yeah.
The bank. Now, what does the bank do? The bank's going to sell it. Now, it depends. I mean, that they could step in and they could say, under normal market conditions, the bank doesn't like to have non-productive assets on its balance sheets, but that's all been changed. Where you can carry that thing as long as you want on your balance sheet, even though it's not producing any income until market conditions improve. But then what do? Then you got to sell it to somebody. Okay, what are you going to do with let's say, an apartment tower? Because of the work from home, that's changed things significantly in the United States and probably other places too because of the COVID pandemic. That now all of a sudden you have all these office towers that are sitting vacant. What are you going to do with them? I mean, people go, oh, we're short, apartments. We're going to convert them into apartments. You know what? The economics of converting an office building into a condo or apartment building are just not there. Each unit takes its own plumbing, and that's a lot of plumbing. On a given floor, maybe you may have one bathroom for each floor. Okay, on each floor, now all of a sudden you have 8 different apartments. Each of those apartments you have 8 times as many people in there, for one thing. Now you have to have, 8 different plumbing systems that all go into a waistline that travel down to the bottom, and that all has to be resized. And in most cases, when you see a situation like that, most experienced developers will tell you, if you want to convert that vacant office building into multifamily, what should you do? Most people tell you, knock it down. Knock it down, start over. That's the easiest and most cost-productive thing to do. But, of course, nobody wants to do that. They all have these theories on how it can be done. But it's just not, it doesn't usually work that way. It's usually highly ineffective, to go from an office building into a heavy concentration of people in apartments or condos because everything has to be changed. Everything. I mean, could you imagine going through 38 floors, with new sewage, new water, new electrical, the whole thing? It'd be unbelievably expensive. And plus, some of those old buildings, I don't know whether some of those old buildings, they would have to be brought up to new building standards. I mean, whatever it is, whether it's fire or whether it's, ecological, like you can't have as much heat loss during, all those things. It has to be brought up to new standards. So some of those stories, oh yeah, we'll just convert them into apartments and everybody will be good, made whole again. That's just a pipe dream.
Now, I did see a short documentary where a developer from India has these modules. It's kind of like a camping trailer or whatever that you can put into an office and turn those into living units and kind of externally hook things together. But the one thing that people really love if you're in a high rise is windows. And of course, offices, only the boss gets a window. All the peons work in the interior, away from the windows. If you bought there, you wouldn't put up with that.
Exactly, and I hadn't even thought of that, Jim. There's another thing, okay? How desirable are those units going to be without changing the entire exterior of the building, right?
Well, unless you had long, thin units, so there's just a window at one end, but again, the other end of it's going to be dark and dingy.
Oh, kind of like a prison cell.
Oh, well, you put it best. Yeah, you don't want to feel confined. That's why even if they have the tiniest little balcony, they still put them on apartments. People like the feeling of fresh air on their home or where they live.
Yeah, you can go outside and see the real world.
Yeah.
Now, do office buildings have balconies?
No.
But it's for a variety of things, like we're just brainstorming it right now. Why not only is it economically impractical, but from a desirability standpoint, are people going to buy them? Probably not.
So we were talking about statistics from China. You don't believe them. How do you feel about the statistics that we get from the Canadian and U.S. governments about officially our economies are doing great? You mentioned before we went on air, the U.S. is predicting GDP growth of 5% in the next quarter. Is that really an accurate prediction?
You know, that may be an accurate prediction for this single reason. The U.S. deficit this year is going to be between $2 and $2.5 trillion. All of that gets added onto the GDP. And does that mean that's a productive use of $2.0 trillion? Absolutely not. You give the government, any government, $1 trillion. How much of that's going to turn into productivity? I mean, something that's really useful. What? 50 cents at most? I mean, so let's do the math. Okay, you give the government $1 trillion. Well, probably 30% at least gets siphoned off because of graft and corruption, right? Now you have government workers, who are inefficient and overpaid. So there's another 20%, and twice as slow as non-government workers. So there's 50%. The government could take $1 trillion and pay people to use toothbrushes to clean up the freeways. And that's $1 trillion worth of GDP. Is there any value in that? No, none, zero. But does that go into GDP? Exactly. And also it goes on to the U.S. national debt, which now is, is it $32 trillion? Based on today's rising interest rates, I think the debt servicing on the U.S. national debt just exceeded $1 trillion. $1 trillion. 3 or 4 years ago, it was half of that. And people say, oh, well, that's because of inflation. Things are coming down. No, it's not. Government deficit financing is very inflationary. It's just like anytime you have a war. You look back at World War II. Were we financing our efforts in World War II with increased taxes? Absolutely not. It was just all going on the national debt. We were financing the whole thing, and there was all this big, inflation went really, really high during World War II, as it usually does during wartime economies. Well, now we're running the same kind of deficits without officially being in a world war. At least not yet. And what's inflation going to do? Inflation's going to get worse. It's going to, at a minimum, it'll stay, at where it is right now, which I doubt. Otherwise, it's going to get worse. So what's going to happen to interest rates? They're going to go up. Mortgage rates are going to go up. I've been telling people, my followers for the last 2-3 months, that there's not only is it the data and the fact that, government deficits are very inflationary, the fact certain chart formations tend to be reliable predictors about what's going to happen in the future, that I said mortgage rates are going to keep going up. I made the call that interest rates are going to keep going up back in when mortgage rates went from 3.18% back in 2 years ago, and they started heading up to where they ultimately hit 7%. I said rates are going up. And it was all based on a simple chart pattern that measures human nature, fear and greed, and that's all it measured. And they went up. And now all of a sudden we've we've taken out the old highs, that occurred like in December 2022. Now mortgage rates are back close to 7.5%. And a lot of people, mistakenly, a lot of real estate pundits have mistakenly believed, well, the rate of inflation is coming down, so that means mortgage rates are going to follow. I said, no, they're not. No, they're not. That's not the way the world works. And at least this time, I've been right about that. And I'm usually right about those kind of things because, my using chart patterns that tend to be reliable forecasters, along with data that tends to be reliable. Also the fact that I know what inflation is and that government deficits are inflationary. And we just hit a 5,000-year, what was it, a 40-year low in interest rates, back in 2022, 2021. Now the trend has changed. Now we're going to start going back up. So we have a whole new set of dynamics, not only for real estate, but for businesses in general. So if you have an iffy business endeavor, you only operate based on, 2% interest, during the no interest rate period, and now you're up to triple that, guess what? You're going to be out of business. You can't operate on that anymore. Free money, the days of free money are over, at least for now. And that's going to create a lot of change. So I think inflation's going to continue to roar. Interest rates are going to continue to rise. Real estate's going to go down. Don't ask me about the stock market. Oh my God. I mean, look, I've been interested in the stock market for 50 years. And I'm not sure I know any more now than I knew then. The most interesting thing, though, is that I've seen recently is we have a company came into business, I believe it was right after the pandemic, called Peloton, that sold these mechanical bikes, just like a regular bike that you ride at home and had a little picture in front of you. And the price of that stock in 2021 rose to, it started at 20, went up to $170 a share 12 months later, and right now, today, you know what it's selling for? $5. $5. And I know that's the stock market, not the real estate market, not the commercial real estate market, not the economy. The stocks are a lot more volatile. But the message is, guys, that people get carried away with their dreams and their illusions, and the average guy loses money all the time by not staying ahead of the trends.
Bob, I know you like to give some kind of tip for life, fitness, investment. You got anything for us today?
Anything brand new? I just finished my second. That David Goggins has changed my life. David Goggins was a Navy SEAL who wrote the book Can't Hurt Me. I read it and reread it 4 times, and he's changed my life, guys. And that's just not an idle statement. He really has. If he hadn't, I wouldn't have read it 4 times. But what I've come to learn is that if you follow David Goggins' advice, that it's never over. Always try your hardest. Push yourself. It's all mental. You can do much more than you think you can do. If you only try, if you follow those simple precepts, you will never, ever, ever get old. Ever get old. And I just finished a second book, which is good, but it didn't have the impact on me that the first book has. And the attitude, and here's the attitude from David Goggins, and that I've adopted personally. You're never finished, guys. You're never, ever finished. Okay, here I am, I'm no young kid anymore. I'm 76 years old, but what am I doing? I've got 2 new books planned. I'm still active very physically, very healthy, and I'm still doing things. I'm practicing to be in a over 65 fast pitch league. I can still throw a football 40 yards for a 76-year-old guy. I could do a lot of those things when I was younger. I mean, I could always throw a football a long way. I could hit a baseball a long way, even though I'm not a big guy. It's all about technique, guys. It's not about being a big, strong guy. You have to know how to. It's like hitting a golf ball. Do you have to be 300 pounds to hit a golf ball 400 yards? No. You can be 150 pounds and hit it 400 yards if you got the technique right. So I know how to do those things, but I'm still pushing on everything I do. I want to be better in every aspect of my life. physically, mentally, intellectually, all those things. It doesn't end until there's a 6-foot hole at the end of the road that you fall into. And you just keep pushing and pushing and pushing. And you know what? Life is great. I don't think I know I haven't. I've never been happier in my life. At age 75, people go like, and do I talk about illnesses or injuries? No, never talk about them. Just deal with them. Deal with them and get over them and keep moving on. And I've adopted the Natalie Wood theory of success, who is a very famous Hollywood actress, and everybody believes with her beauty and her talent, it's a real cakewalk making it in Hollywood, which it is not. But her attitude was, keep a smile on your face and just keep moving forward. And that's what you do, guys. Never, ever give in. If you get injured, get over it. If you get sick, don't get sick. Eat right. Take care of your body. Take care of your body. You have to eat right, and you have to work out, and then you have to stay mentally alert, to new opportunities, and keep looking over the horizon. If you see something and go, hey, I'm going to do that. Do it. Do it. Because you never know unless you try. You never, ever know unless you try. So be willing to try it. And I can guarantee you guys, it'll change your life. It'll give you more energy, more enthusiasm for life, all that. And not only that, and this isn't imaginary, people will sense it. They will sense it. They'll come up to you, and I can see the change in me. They look at me, and they just see whatever I do, whether I'm in the gym lifting weights or out throwing a football. They know, you know what? This guy, you don't want to screw around with this guy. I mean, he's just on a mission to do whatever he does as good as he can do it, to nobody's disadvantage, but only his own advantage, and it's an attitude. So what I'd like to leave you with is I would recommend anybody, all of you, to read the book by David Goggins, Can't Hurt Me. It's unbelievable. I mean, and if even if 10% of you, it can change your life like it changed mine, you'll be so grateful that you read that book. But then you have to put it in practice. You have to try. This isn't something you say, okay, I'm going to start this tomorrow. No, you start it right now. And all of a sudden, you start it right now. And do you have to be good at the start? No, you just got to start. Just got to start. Like doing push-ups. How many push-ups do you want to do? How many push-ups can you do right now? 5? Okay. You should be able to do 30. Okay. Do 5. Next week, do 6. Next week, do 7. See, and you know what that does? You're pushing yourself. That gives you the mental strength to know you can do it, where you're mentally strong. Because most things in life are not about being physically strong. It's about being mentally strong. Like, you can't hurt me. You can't do this to me. Nope. I'm mentally stronger than you are. You can't. I mean, is that always true? No. Is it true most of the time? Yeah. If somebody has that attitude, you can't beat me. I guarantee all professional athletes, baseball, football, basketball, they all have that attitude. You can't beat me. Because if you didn't have that attitude, you wouldn't be able to perform at that level. So you got to get that attitude, guys. And whatever it is, whether it's physical, whether it's mental, whether it's intellectual, you want to write a book, whether you want to start a business, you can't beat me. I'm good at what I do, and I'm going to show you. I'm going to beat you. And that's the edge it's going to take you to places that you would never imagine.
Bob, thank you so much for chatting with us.
Thank you, Jim. Talk to you again next time. Bye, everybody.
My guest has been Robert Campbell, publisher of the realestatetiming.com newsletter. He was speaking to us from San Diego. If you have any questions for Robert, you can send them to info@housestreet.com. That counts for any of our guests. You can find us on Twitter @HouseStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.